All right, so we're moving on to market structure now. Market structure is one of the key things you need to succeed as a trader. Without market structure, you will most likely fail as a trader, if I'm being dead honest with you. So market structure is basically the simplest form of price movement. It is basic high and low, support and resistance, swing highs, swing lows. So as you can see, I've got a little diagram on the left hand side here. What we're going to see is the market pushes up, makes a high high, market pushes low, makes a higher low, a high low, a higher high, higher low, a higher high. What do you call that? That is a bull trend. Straight away from the get-go, no drawn out lines, no nothing. Looking at the market, you know what you're getting involved in. You know exactly what you need to wait for. You know exactly what you need to do. We got the bear trend now. We got a lower low, a lower high, a lower low, a lower high, and then we're pushed down. You know exactly what you need to do. You're waiting for a retest to now get in to go to sell off, unless you see, a shift in the market where, okay, maybe the bulls are coming in. Then we have the ranging markets, which is sideways. So we got equal lows, we got equal highs. You know exactly what to do with there. Either stay out of the market or get in the market and trade the highs and lows. That is it. Simplest form. It shows you automatically without no analysts, no nothing, no help. I know exactly what's going on in the market. That is why this is so important. So now let's jump onto the charts real quick. And let me show you the 4 hour that we was looking at previously. So as you can see, the weekly support and the weekly resistance. So what's going on? It's dropping, no? Straight away, you can already see that. You've got higher lows and lower highs straight away. So we got a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. But technically speaking, even though this is in a downtrend, this right here is equals. These are equal highs. We'll talk about this later on in the next volume. But as you can see, these equal highs have been taken out and they've become liquidity for anyone that's hoping for, let's say, the best, or their stop losses are ready to get wrecked and waiting for the market to keep going down. So this is what the market's done. It's manipulated these lot out and just taken all their money and just pushed down. But after that, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. As you can see, straight away, like I said, from the get-go, if we now move to the left of the market, we can see the exact same thing. We've got the higher low, higher high, higher low, higher high low, higher high low, higher high. The market does it no matter where you are, no matter what you're doing. Of course, you have the ranger markets. Let me even show you the ranger markets real quick. This is what I'll say is the quick ranger market. You do get the higher highs and lower lows if you're really looking, but overall, I'll say this is in a tight range, and you're not going to get the exact lows that you want or the exact highs that you want. That's why some people do not trade consolidation or range markets that move sideways. If you can get your trends, get your trends. If you can always just get your trends. There's nothing else, to be honest. All right, so this is another little thing about market structure that people don't often talk about, or maybe they do, I don't know. But here we have higher time frame. So let's look to the left. Higher time frame, we've got a higher high, higher low, higher high, higher low, higher high. And then you've got the lower time frame structure, which is producing lower lows, lower highs, lower lows, lower highs, lower lows. What you're gonna do here is similar to the 1 week and what's it called? The 1 week and the 4 hour that I've taught you. So when you're seeing overall the market is pushing up, but then you've dropped down and you've gone to the 4 hour market, and it's pushing upwards or downwards, that's because that time frame structure is different from the higher time frame structure. So all you need to do is know exactly what kind of trend you're in. So if you understand the higher time frame structure, and you drop down and you see the lower time frame structure, use your higher time frame structure to build your overall bias. Then when you drop down, you now need to understand the current trend and make it fit within your overall bias. So do you want to counter trend the higher time frame, or do you want to counter trend the lower time frame? I wouldn't advise it unless it's a key level, so you know that the market's looking to reverse at this level. But we never know for certain when the market's going to reverse. So just keep your eyes peeled and be patient, because that's the most important thing in this game. Patience.